Good morning, everyone, and welcome back to this new appointment with the morning briefing. Let's obviously start with the usual recap of yesterday, which we already discussed in yesterday morning's morning briefing. There was this gap opening as a result of the statements from NVIDIA CEO, consequent to the trade war between China and Russia, which is now obvious and evident to everyone. And this led the market to this gap opening. I'm looking at the Nasdaq, after which the market sought a support base that had held during the opening phases. We are then approaching Powell's conference. The market, in short, it went down. It dropped to quite significant levels, reaching 83,100, with the Nasdaq starting from 83,600, saw a movement of 400 to 500 points of movement due to concerns arising from Powell's press conference, where he is reportedly worried, in short, about these outcomes of the trade war. In short, there are many variables and uncertainties. So, the markets, as we know, need calm. Obviously, all this led to, in short, a significant sell-off in the afternoon. But then in the evening, in short, there was a new opportunity for an opening. Let's say on China's part, in short, to have a table for negotiations with the United States. And this, in short, gave a little bit of liveliness back to the markets that tried to recover. Already, in short, at the close last night, in short, during the night. Already, now with the opening of the European markets, now, in short, they are going up. We are re-entering the BC3 range from yesterday. We are already working above RD1. So this gives good reason to hope. Today, this is a short week. Tomorrow is Good Friday, perfect for everything. In short, for all Catholics, in short, I wish you a happy Easter. And in short, since it's Good Friday, it's a holiday. In short, on a global level, so all the stock exchanges are closed on Monday. However, Europe will remain closed while the United States will stay open. So I will provide the levels calmly on Monday morning, despite it being a holiday. In short, even here in Europe, I will still provide the levels as usual on Monday, both weekly and daily. As for the macro data, today we have at 2:30 p.m., so around 8:30 a.m. New York time. Roughly, there is the ECB meeting with the ECB statement. In short, a 25 basis point rate cut is expected. These are the expectations, and since, in short, in Europe, inflation is more under control compared to the United States, and therefore this should lead to the expected cut. In short, it's already somewhat priced in by the market. Then we have, as data concerning the US, the jobless claims on Thursday as usual, and then we also have data on new housing starts and building permits, which will certainly provide some indication on the labor market, which, if recovering, could certainly give good hopes for growth. Perfect. With this premise made, let's take a closer look at this day. We are essentially interlocutors at the moment because we have recovered, yet we remain below. If we look at starting as usual with the Nasdaq on the 4-hour chart, here it comes. The situation is tentative, let's say. A triangle is forming. We'll see a real sense of uncertainty. Because, I repeat, if Powell is uncertain, if Those in charge, who have significantly more information available than we do, are uncertain, express doubts about what the scenarios might be, or hypothesize various ones. Imagine all the difficulties we might have, given that we have a level of information that is clearly inferior to theirs. Perfect. So, as I was saying, this triangle is forming, as you can see, even though it's very wide due to high volatility. We will see if eventually there will be an exit from this triangle, if we will need to adjust it. I drew it just to give you an idea of the market phase we are in. So we had the double top, we had the pattern, the break of the PV. We broke it, we went back to retest it, we retested. The lows that held initially didn't even manage to retest the previous high, and the next wave started very aggressive. So they found a support base to these lows that we had indicated. In short, new swings with increased volatility due to the entire trade war, in short, for all. All these matters that we know. At the moment, the level to monitor remains the one we indicated yesterday. So this pivot here is the one that clearly stopped, as you can see, the bearish movement, as we had indicated. So this remains absolutely crucial. The break of this, of course, is of this triangle that we have just drawn, just to have an additional reference graphically. We can proceed. In short, it's not that I start working. This triangle, however, is certainly a reference. So the break of this pivot attests of this trend line that is part essentially of the base of this triangle, and a possible break would certainly lead to an initial test of the levels recorded. In short, last week we'll see. It could also be in view of these closing days, perhaps with the absence of pin short to move sideways, remain within this triangle. We will see what developments occur, then we must always be ready. To the news, to the statements that may come, which can certainly provide the push of volatility both on one side and the other. In short, it then depends on how the market interprets them, on what they will be, on what one of the statements that arrive. Perfect. Having looked at the Nasdaq, let's move on to the S&P. We obviously have a more or less similar situation. We can certainly go and look at it immediately on a 4-hour chart, so we have it here as well. A clear idea of the level, the key level here. In short, this one here, 53.60. In short, we have pointed it out time and time again. Here too, we can draw a nice little triangle. In short, we always put the blue one on top and the red one on the lower side. In short, now we'll adjust it a little bit. Here it is again. As you can see, I draw these illustrations just right to give you an idea of the state of the market. In this context, the market moment, there is uncertainty. So at this point in time, the market tends to swing with very wide volatility. For all these situations which are on the edge and are certainly crucial for many aspects, we have this type of market to which we must be ready. It's aesthetic and capable, in short, to react immediately. I was saying, as a figure here, maybe by adjusting it a little bit, we can cut out this spike and short the shadow of the market. In short, it looks nicer. In short, we could adjust it further. Maybe you can. Have fun doing it more leisurely. The logic is this: it's not that we needed to enter, we needed to have a reference from an operational point of view, as we were saying. 5,360, which is a significant threshold, continues to be certainly important to overcome. If it were to be broken, it could certainly be a test of area 54 and 50 before 55. Then subsequently, maybe after a lot of time, the activity could be reached. Certainly the target on the downside. Obviously, we always keep this PV here as a reference, even if it has been slightly distorted. You see, however, with all the shadow, then in short, the opening of the candle was at above the PV, therefore, in this area absolutely remains valid, which today corresponds to the SD1 and SD2 area. Okay, having looked at this, let's obviously take a look at the other American futures, starting with the Dow Jones, and here it is. Let's also look at this one. It's a 4-hour chart. In short, high volatility is a must. Here too. In short, I won't draw it, but you can also draw it here. In short, a nice little triangle always waiting. In short, where the market can lateralize, everything remains unchanged. Guys, in short, the PV remained intact even yesterday. In fact, it even stopped before and then started again. So let's definitely monitor this area here, which today corresponds to SD1. To the downside, in short, to the upside, of course, we look at 41,000. In short, a break of this level could take the price indeed much higher, but I repeat, probably at the end of the week with a bit of uncertainty due to the long weekend. On the horizon, it could lead to some selling, some covering. In short, we'll see. Let's not make plans, because otherwise the mind starts working, the brain starts working in these ways, and then we anchor ourselves to certain scenarios that might only be in our heads. As always, let's look at what we have in front of us. Let's look at the Russell, of course. Here it is, a similar situation, even though, like with the Dow Jones, I think it's a little better on the 4-hour chart we're working on. In short, yesterday it messed up this PV. I went to test it. A bit lower, then it had a nice reaction. We are working above today's RD1 levels. The break of a test certainly makes sense. A test of the 1920 area, whose break would definitely bring prices to 1950, probably with a good real system push. In short, here the triangle, also here, in short, you can go ahead and draw it. In short, these are similar situations for everyone. Let's also look at the American futures. The DAX, which I mistakenly overlooked yesterday. At the moment, we also see it on a 4-hour time frame chart. Here it is. Here as well. It's a bit of a broader range. Let's say that at the moment, it is already working on the highs made. So recording a breakout of 21.6 could probably lead prices to test this area, this minimum here of this trading range, whose breakout could then lead to this moment. So let's monitor this level for those working from home, because a breakout of 21.6 could definitely bring prices to the 22.2, 22.3 area, essentially a test of this area here. On the downside, of course, we always monitor this pivot here, which seems quite clear to everyone, as it is below today's minimum ranges. So definitely the first to pass as a pivot is this one in the SD2 area. So between 2980 and 21,000. And then essentially this could be the target. But at the moment, essentially the opening, well, it's 9:30. The market is open. The opening is on the rise this morning in the European markets. We'll see if the continuation of the day will confirm this. Let's look at oil now. There has been a rollover to the new contract, which is the of June. Obviously, if we look at it also on a 4-hour chart to get a better idea, you see how it's somewhat mirroring the American indices excellently. The oil, let's say it made this nice movement. V now, it's working on it. It could be, well, essentially done. The low is forming a base. So holding these levels here around 61 and 50, 61, 61 and 50, holding this area could push the area further together here towards an upward movement in the markets. In the stock markets, certainly it could bring the price back again to the area of 64, 50, 65 as a first instance. Then to add here to 65.50, which are all these lows here from which this base was created for an initial rejected rebound. Then we will talk later. Obviously, here it is. In short, yesterday it made a nice rise at the close. In short, a new series of all-time highs. Now it has come back a little. It's working on SD1. It has returned to test precisely, in short, the levels from which it started. In short, this base, made of previous highs, has been tested again. In short, holding this area could definitely lead the area. Prices to retest the previous highs, and in case of a breakout, could bring prices to the 1D max area. Obviously, let's keep an eye on this level. BC3, this area is definitely a very important support. Between 3310 and 3300, we can hypothesize it's a potential buying area. The break obviously could also lead the price to eventually test this base here, which was previously created at 3250, 3260. Okay, having looked at this, we still need to look at SPX, which has always remained on the 4-hour chart, is still there. At the moment, in short, it's working here as well. It has held this PV that we have pointed out several times. Let's hope that today it can return to the maximum area. Here too, you see a bit of lateralization is forming with a triangle that we can definitely go ahead and draw. Here too. At the moment I see it like this, then we'll try to adjust it. We can tweak it a little. We even start from these. Here it is. Here, maybe MH. There it is. Yes, here it is. Here it is. Yes, like this. In short, it's more pleasant, perfect. In short, it has worked on it. So, in short, holding this level could lead. Here again, the small pieces in the retest area of this zone. Here, in short. And maybe stay. In this limbo waiting then here for this long. Perfect weekend to pass. That said, we have reached the end of this session, as always. I remind you that, in short, consider that today is Thursday, but treat it as if it were Friday, exercise maximum caution and have a good weekend. Preserve your capital, psychological and economic. I invite you, as always, to leave a like on the video. We'll talk later in the chat. Thank you all for your attention.